Today on the podcast, it is Stock, Trade, and Invest Day, my man. So I suggest you get your pens and your pencils and your pads and your tablets and everything you got and you need. Today, it is going to be a great educational day. Frame Mind Podcast starts right now.
Get your mind right. Get your mind right.
It's a frame of mind.
Ladies and gentlemen, welcome to the Frame of Mind Inc. podcast. This is your boy Simbawi Nibaye Jr., a.k.a. TK. Along with my man Omar Williams, we call him O. Say what's up to the peeps.
What's up, good people?
It's another lovely Wednesday, and y'all know how we do. We jump right in, and we don't waste no time. But before we do that, it's Affirmation Wednesday. We got to get those in and out the way. So if you got your affirmations written down or you got them memorized or whatever you want to do, stay along with us. Let's say these and get them going, get them popping, get that day going right. If you're getting the replay of this, video-wise or audio-wise, you can come along with us as well because you're just as important as we are. It ain't Wednesday. It could be Thursday, Friday, Saturday, Sunday, Monday, or Tuesday. Whatever day it is, it's affirmation that day. Are you ready? Let's get it. Today will be a good day. Today will be a great day. Today will be an amazing day. Today will be an awesome day. Today will be a phenomenal day. Today will be stress-free. Today will be a stressless day. Today, I will overcome all barriers that want to block my progress. Today, all circumstances, issues, and situations will work in my favor. Today, all things will line up for my good. I am a go-getter. I am victorious. I am triumphant. I am an overcomer. I never lose. I either win or I learn. I take authority over this day. I will dominate this day. I will conquer this day. And everything I have spoken into this day will happen as I have affirmed because I am more than a conqueror. Let's get it popping. As I stated, today is Stock, Trade, and Invest Day. And on those days, I take a step back. I let my man O take over the show. So, from this moment on, it is your show, my friend.
My man. Thank you, brother, again. Again, I'm honored to be able to share my knowledge, share my information. So today, we're going to be talking about something that's very, very, very important. And I feel like it gets glossed over when it comes to educational programs. They mention it, but people really don't really get in depth with it. And again, I'm gonna give you what I got, but I'm not, got to get that old package for us to get really in depth. So let me just start with a quick story. So I started trading around 2010, 2011 in Forex. That was my very, very first thing that I started to trade. And around that time, I kind of was looking at stocks in the background, but Forex was my main bread and butter thing that I said, I'm going to learn this. I'm going to get it. And I took a course that was free online. Then I'm like, I need a little bit more. And I needed a little bit more. So I bought another course online, which was very helpful. And what I realized after doing both things is like, you still got to dig up the gold for yourself. So I kept on learning. And then I felt like I was ready. Okay. And so I put a lump sum of money in my Forex account, and pretty much on my first trade, I lost 90% of it. 90%. So it actually ended up being the worst trade I ever had and the best trade I ever had because of the topic we're going to talk about today. And the topic is risk and risk management. Okay. It was the worst trade I ever had because it blew up 90% of my account, but it was the best trade that I ever had because it made me take the last 10% of it and trade that thing to where I'm still trading on that 10%. I never lost it. Like I never lost it all. So That in itself, if you understand trading, is amazing. I mean, I don't claim to be Warren Buffett, but that is amazing, right? So today we're going to talk about risk and risk management. So let's start off with the definition of what is risk. And I think we can all apply these things. So we're going to talk about trading today, but you can apply it to your life. You can apply it to your business. You can apply it to everything you do. Like risk management is very, very, very important. So risk, what is the definition? 1, exposure to the chance of injury or loss, a hazard or dangerous chance. Okay. Check this out. The second, this is funny, and this had nothing to do with finances, but it does. The second definition is insurance. The hazard or chance of loss, the degree of probability of such loss, the amount that the insurance company may lose. So when insurance companies, have you ever gotten insurance, life insurance? They are taking a chance. That actual number that they give you, that they say you're allowed to get, is based off of chance. They're doing all these data sets saying you're this age, you're this health risk, you're this, that, and the third. And they count the cost and take a risk on saying, okay, it's a good chance that this person probably will never use this life insurance. Or if he does, he done paid so much into the insurance policy that he's not even going to cost us money, even if he cashes it out. Okay. And the last definition is the type of loss as life, fire, marine disaster, earthquake, against which an insurance policy is drawn. Okay, so risk is important. Let's talk about what risk is in financial terms. So that's just the definition of risk. So risk, what is risk management when it comes to finances or anything else in your life? Risk management is the process of identifying, assessing, and controlling threats to an organization's capital and earnings. These risks stem from a variety of sources, including financial uncertainties. So if we just put a pin in that, like we've all just went through a COVID, we've all went through a stock market crash. Well, not crash, but it's dropped 20% since the highs. Inflation, right? If we have been setting, like if we run our house based on this, we will be setting ourselves up for the risky times like that just happened. Okay. So, okay, let me read it again. Including financial uncertainties, legal liabilities, technology issues, strategic management errors, accidents, and natural disasters, right? So they're saying a successful risk management, and this is from Tech Target. This is about security. So like it's about tech security. I'm getting this definition from. I didn't even get into the actual financial things, but this is about tech security. But it says a successful risk management program helps an organization consider the full range of its risk it faces. Risk management also examines the relationship between risk and the cascading impact they could have on an organization's strategic goals. Now, just let that sink in. At what parts of your life can you even think of that you haven't counted the cost, you haven't done the risk assessment, you haven't even done risk management? You're just out here doing anything you do. You're buying this, you're selling that, you're just thinking it's going to get it's going to get better when you're not even doing anything to protect yourself from any risk that's taken. And everything comes with risk. When you buy a home, it comes with risk. When you buy a car, it comes with risk. Even the job you take, there's a level of risk to it, right? Even, okay, I'll give you an example. Say you drive far to go to work, but you decided to get the cheaper car because it's the one that you could afford, but you should have got the better car so you can get to work. You get the cheaper car, it breaks down on you, you can't make it to work, now you're late, so on and so forth. Things spiral out of control, and you end up paying more money, not counting the risk, than you should have, So let's go down here. I'm going to read this well. This is every organization faces the risk of unexpected harmful events that can cost its money or cause it to close, okay? Risk untaken can also spell trouble. Now, check this out. As the companies disrupted by born digital powerhouses such as Amazon, Amazon put Barnes and Noble out of business. The funny part is we don't think about that as like we'd forget that Amazon was a book company. Barnes and Noble was everywhere, put them completely out of business. Netflix, it said Amazon and Netflix. Netflix put Blockbuster out of business. Okay, so like Blockbuster, Barnes and Noble didn't do a risk assessment. They didn't manage the risk. And I've said it on here before that Netflix tried to sell their company for $50 million to Blockbuster, and they said they wanted no parts. Now look, nowhere to be found. I think it's like one left in America, and that might be Alaska. So, so this guide to risk management provides a comprehensive overview of the key concepts, requirements, tools, trends, and debates driving this dynamic field. Okay, so basically, risk management is very, 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 very big. A lot of times we get into trading and people tell you how much money you can make with $100, or all you need is $300 and you can make millions, right? And the funny part is, the bad part, and I almost don't want to admit it, you actually can make a lot of money with a little bit of money in the stock market. The only problem they're not telling you is they took a risk. And the risk was they took $1,000 risk that was a 2% chance of happening. And it hit. So it's almost like a lottery ticket. I always compare it to a Hail Mary in football. Okay. The team that threw the Hail Mary may catch the ball, but they just won the game. And the team they beat end up winning the championship. Let that sink in. The team that threw the Hail Mary caught the ball, lucky chance, they won the game. But the team they end up beating ultimately won the championship. Why? They're a better team. They're not winning, taking big risks. Okay, I'm going to give you another football concept. Usually when teams aren't good enough, they have to bring out the trick plays. Well, if you know about trick plays are risky. Why? They put the ball at risk. Usually when you do trick plays, you're tossing the ball backwards, or you're hiding the ball here, or you're doing things tricky with the ball, which can lead to a turnover. Or you're throwing the ball in a way for a big play that can get intercepted, knocked down, a fumble can occur, or things of that nature. So what happens with trick plays, it's a lot of risk taking. Okay? So back to my analogy about the Hail Mary being very risky, and people thinking they're throwing Hail Marys in the stock market, and they were hidden. And if you go to my past videos, you know why they hit. A lot of money was pumped into the system, which allowed it to hit, right? Allowed things, easy money means easy assets soak up price. So when they pump money into the system, assets grow, and grow. Well, guess what they're doing now? They're taking money out the system. So it went from a thing called quantitative easing, which was money in, to it's quantitative. Basically, they're taking money out. I forget the exact name of it. It's quantitative easing and quantitative. Basically, they're taking money out of the system, or they're stopping the printing press from putting money in. So what's that mean? Well, asset prices are going to go down. For all you people that are in real estate, look at the real estate just that quick. It went from here, and it's not that low. It's not much lower, but it's lower than it was. Okay. Let's get into this with the economy now. So, let's talk about risk management from the economic standpoint. Those last two things, definitions I gave you, was just risk management on company side, what risk meant, and now we're going to talk about how risk management goes into the economy side. Okay. What is risk management? In the world of finance, risk management refers to the practice of identifying potential risk in advance, okay? Analyzing them and taking precautionary steps to reduce or curb the risk. Before I continue, all that means is there's things in place, things like stop losses, okay? Things like targets that you may want to hit. There's certain things that you could put in place to prevent you from losing your entire pot. Back to my beginning trade in Forex, I had a stop. I did have a stop loss. I did. But my risk was too big. So even though your stop loss exists, is the amount you're risking too big, right? So I risked 90% of my account and had a stop loss. I look back and I go, oh my goodness, man, what was I thinking? Like I don't even know what I was thinking. So when an entity makes an investment decision, it exposes itself to a number of financial risks. Just like us, when we make a trade, we expose ourselves to financial risk. Every time we make a trade, we expose ourselves to the market. Okay. The quantum of such risk depends on the type of financial instrument, though. So, okay, if we buy a home, like say we get into real estate, there's risk with that. Say we get into art, there's risk with that. Anything you name, NFTs, there's risk with that. I don't know if you've heard, but a lot of these NFTs almost are worth nothing anymore. They went from millions of dollars to zero. How? You tell me. But at one point, but it was big risk involved. But people were telling you, all you got to do is buy NFT. All you got to do is buy NFT and everything will be all right, right? These financial risks might be in the form of high inflation, big risk, volatility in the capital markets, recession, and bankruptcy. Everything I just named is what's going on for the most part now. People think Robinhood is going to go bankrupt. People think it's a lot of companies that were darlings during COVID that are not anymore. We good, brother?
Yeah, we're good. If you want, we can take a break right here, and then we
Yes,
can come
sir.
back if you want to. All
Let's
right,
take a
that's
break
cool.
now. Yeah.
Let's do that, people. We're gonna take a quick break. Come right back with the Frame of Mind Inc. podcast in just a moment. Are you looking for an apparel company that's positive, uplifting, and truly cares about you? Then look no further. Frame of Mind Inc., an apparel brand company, impresses on individuals to think positive thoughts, say positive things, and do positive deeds. Get positive apparel such as t-shirts, hoodies, and wristbands for children, teens, and adults in various colors and sizes. Customized services include logo and t-shirt design, screen printing, and embroidery for individuals, families, schools, profit, and nonprofit organizations. You can reach Frame of Mind Inc. at 302-689-3499 or visit their website at www.frameofmindinc.com. Frame of Mind Inc. Think it, speak it, achieve it.
It's a frame of mind.
All righty. We are back here, my man O, as we go into the second half of our stock trade and investment. And I hope y'all taking notes because I know I am, and I know great information is coming through and coming forth. So, it's back to your hands, brother.
All right, sir. All right. So just to continue on. So just to give a recap, we're talking about what risk was, what risk management is in companies, and now we're talking about what risk management is in the economic world. So what happens is the way people so what happens is to minimize, or what companies do to minimize and to control the exposure of their investment to such risk, as we just named, to high inflation, volatility, the capital markets, right? Recession and bankruptcy. What they do is investors practice risk management, not giving due importance to risk management while making investment decisions might wreak havoc on investments in times of financial turmoil in an economy. Okay. Different levels of risk come attached with different categories of asset classes. Okay. So depending on what your investing in, you do different types of risks. I'll give you one that we all have, like we all should have. We take risk on our lives. We get life insurance. That is a level. That is risk management. I know it don't. I mean, you may not even look at it that way, but it's risk management. If something were to happen to you in your 40s, your 50s, your family should be left with something that you've put in place for them. Okay, or you can wipe out all the debt of your family based on your life insurance. Or if you know anything more about like whole life insurance, there's bigger things you can do with that. But we're not going to get into that today. Okay. So now, so basically what I'm getting at is if I would have known what I know today on that first trade, I wouldn't have lost 90% of it. Okay. I would have only risked 10% of my big account. Okay. And traded with that rather than trade with 90% and only have 10% left, which ends up blowing your account. And they say only that, and that's the reason I think, and I believe personally that they say 92 or 98%. I think it's like 91% of traders fail. That in itself would make you not want to do it. Like if they're telling me 91% of traders fail, why would I want to trade? Well, I think it's certain information that's not provided, and I think they want everybody in because of liquidity. And what I mean by that is so the market is buying and selling. Okay. I need as many people in there as possible because if I'm selling something, I need somebody out there buying it. I don't care how smart or dumb they are in the market. Like, I don't care what they know. I just need a person to buy what I'm selling. And if I'm buying something, I need somebody dumb enough to sell it to me at that price. Now, everybody's not dumb and everybody's not smart, but they need as many people in these markets as possible to create the liquidity to get in and out. Because if I wanted to get out, say I'm selling something and I wanted to get out and there's nobody selling it there. Say I wanted to sell something at $10. I can get I can get my highest percentage at $10. There's nobody buying it at $10. So what happens is price discovery, it'll go down. It'll go down to $9.75. Then I'll try to sell it there. Basically, make a long story short, until they match me up with a buyer of what I'm selling, I'm at the mercy of the market of whoever wants to buy it at that particular price. So the more people, the higher chance you get to get in or to get out, right? So I believe risk management is the biggest. I mean, the one, like, it's the biggest. If anybody's out there who's thinking about trading or looking to trade or looking to get into trading, I'll say this: if you got a person that's not talking about risk management and they're telling you all these millions of dollars, thousands of dollars you're going to make off of a $500 investment to their course, run. If their course not telling you about risk management, if the system is not based around this, like has a risk management factor to it, run. I'm just giving you look. Even if it's not my system you're getting, and you're looking for somebody else's system, if it's not based on risk management, run. So I'm going to do an example tonight and just show you that how important risk management is, right? If you get it down, your system don't even have to be that good and you can still make money. If you can get risk management down, your system don't even have to be that good and you still can make money. Okay. So I'm going to show you guys something tonight. You ready, brother? We going to flip the screen now.
All right, I got you. Let me know when you're ready.
Let me just say this real quick before we go. And I got to tell you what I need you to do too. So let me just do this. So the market can either do what? Go up or go down. 50% chance of going up, 50% chance of going down. So you really got a 50-50 shot, regardless of what you're doing, to get it right. So you wonder why. So how do you think that 90% of people can't get it right? I was one of the 90 at one point, and then I got it right. I was in that number. I'm out of that number now, man. I get it. It's not even that nobody knows which way the market is going, but we do know it's going up or going down. And once you understand that you have no control over that, and you have a 50% chance on top of adding your program to the 50% chance, which can actually increase your odds, you can't lose. Let me just do a quick example. All right, I'm ready to share the screen.
All right.
Just give you an idea of like what I'm talking about. We up?
We are up, brother.
Oh, all right. I'm sorry. So, like, I just give you something as dumb as this. If I told you that every red candle go down and every green candle go up, could you make money? Just looking at what you're looking at.
Absolutely.
just every red candle go up, down, and every green candle go up.
Absolutely.
Could you make money?
Absolutely.
Okay. Right. So, no, just looking at this, how do we lose? I'll tell you how we lose. Our risk is wrong. I'll trade this right here. It's green here, but I've traded my whole. So if you see my cursor, if I just took green candles and I said, all right, my first green candle, I'm going up. My first red candle, I'm going down. Okay. My first green candle here, I'm taking it. I made a lot of money, right? Made a lot of money. Now here's my first red candle. What happens is,
talk to him, brother.
I'll take this down. Okay, I've even made money there. So now I'm up good money, but no risk management. I'm still. So what happens is I'm still risking 90% of my account on all these trades. So the numbers look crazy until I get to this one right here. Okay, I take this green up, and for me to get out, I need to see a red stop, right? So I take this green, it's going up. Now look at this big red candle here. That is what takes your count back down to zero. Right there. You done made 100 grand on them first two trades and lost it all.
Or more.
Or more with this simple mistake without risk management. You gotta let this sink in. You literally could take you don't even have to know what you're doing, and with risk management, just be right 1 out of 5 times and be good. And when I say 1 out of 5 times, meaning your risk to reward is, say you want to get $5 to every $1 you put in. Or you could do, I want to make $2 to every $1 I put in. And when it's a loss, I just lose $1. Okay, so back to what I was saying, and we're going to get to this example. The market it has a 50% chance of going up, a 50% chance of going down. Now, good brother, you still see my screen, right?
Yes, sir.
We're going to flip a coin. I need my man to write down if it's heads, TK.
Or if it's tails.
Nope, I don't need you to do that. If you see, you can see the screen, right?
I can see the screen. Yeah, I can see the screen.
All right. If it's a heads, I need you to put a +2.
Okay.
Because we're going to do a 2-to-1 risk.
Okay.
We're going to do 2-to-1 risk management, meaning 2-to-1 risk management means that for every dollar I put in, I want to make 2. For every loss I only take a $1 loss. Okay. Markets 50% chance up, 50% chance going down. I hope everybody's with me. I believe my brother understands what I'm talking about. So every time it's a heads, TK, write a 2.
Okay.
Every time it's a tails, write a -1.
Okay.
We're going to do this 25 times. I picked the number 25 because it's a trader named Mark Douglas. He's soon passed away, but he's wrote a lot of books and got seminars. Look him up on YouTube too. But he's the king of nobody knows what's going to happen, but your system has to have an edge. And the biggest part of your system is risk management. So he says if you take 25 trades, you should know if your system works or not.
Wow.
Okay. Now, we don't even have a system. This is just 50% I'm going up, 50% I'm going down. And we're going to say every time it's a heads, it's a winning trade. Every time it's a tails, it's a losing trade. But our winners are going to be 2, and our losers are going to be -1. Are you ready?
I'm ready, brother.
We're going to do this 25 times. You got enough space on your paper?
I'm good.
All right. So please hear me, whoever is listening. This is the one right here. Because you could just put a line on the screen and take when the line goes up, invest up, as long as your risk management's in place. Here we go. I'm clicking. First click. We got a tail. -1, right?
Yep.
Ready? Tell me. I'll just keep going. Ready?
Just keep going. I got you.
All right. All right.
All right.
All right. That's 10. 15 more to go.
And those of you who are listening audio wise, we're flipping the coin. I'm just writing them down as he's doing it. So it's going to be a little quiet for a minute. Just hang in there.
Yeah, I'll talk it through. I'll actually talk it through. So we just did the heads. That one's another heads. We got a tails. That's 15 down. Now we got 10 more to go.
They're getting some education today.
Tails. Yep. Heads. You still follow me, brother?
I got you, brother.
All right. Now the tails. Now the tails. Now the tails. Now the tails. Wow. Okay. Now the heads. Here we go. Now the heads. Now the tails. Last one in heads. Okay. You got that, brother, man?
I got it.
Now, just from the flips, it was a lot of losing trades. I'm glad that happened because I'm so glad that happened. Can you add up all the 2s?
Got you. And before I do that, those of you who are listening audio wise, we're using a digital coin to flip heads or tails. So we can see it on video, but you can't see or hear it in your audio. Just
Right.
you know.
And let's do this. And the reason why we did this is because it's a 50% chance of the market going up or down. That's why we used a 50-50 flip. And I just want to show you how much risk management works when you get it right. You can literally flip a coin, and before you count or as you add that up, they did a study where a ape was throwing darts at a board picking stocks and did better than people who actually think they know what they're doing. And this is a true study.
Wow.
Because nobody knows, man. You know,
That's crazy.
nobody knows. You got ideas, like you know that you know Tesla's a great company. You know Apple's a great company, but you don't know if it's going to go up or down. You know what I'm saying? You don't really know that. You know they're a good company though, so it's a good chance they'll go up, and you can put odds in your favor. Like you could put, Amazon's the greatest company in the world. Okay, it's a great chance that it's going up, but you don't know. You know what I mean?
Gotcha.
You don't know. All right. So what we got here? What's the 2s add up to?
So the 2s add up to 10.
Uh-huh.
And the 1s add up to 15.
So that's good. That's 2-to-1 risk. Okay. That means you're taking 50% risk when you do 2-to-1. So you're risking 50% of your big account, and you're only down 5. Like that, like you're only down 5 out of having 25 chances. Okay. Now, if my man was to do, so turn them 2s to 5s, TK.
Okay.
Say we did, so 5 to 1, okay, is like 20%.
That's about 20%, 20,
Yeah.
25, 20%, something like that.
So if you risk 20% of your
20%,
account,
20%.
20% of your account, now we're changing the numbers. Now it's 5 to 1 we're doing, which is now risking 20% of your pot. How much are the 5s?
Well, if you got
be
10
50.
5s and 15 1s, that's 55s.
You got it. Look what just happened when you change your risk management. Just that much. 20% changed everything. Now you got 55 to 15 1s. So you're up. So if you do 55 minus 15,
30, that's
that
35.
is 40. That's 40, right? Oh, hold on. What is that? 55
No,
minus
50,
15.
50 minus 15.
Oh, 50 minus 15 is 35. So
35.
you're up 35. When you risk more of your account, you were down 5, which is still cool, but just risking that much less has you up 35. I don't know if this example is going to sink into people, man. I don't know if a monkey could do it with risk management.
And listen, for millennials, they've been comparing us to monkeys. I'm just saying. I don't, but they have.
So check it. It's I'm excited because you know, you do something for so long and it finally clicks. Like
Yeah.
you've been doing it forever, and this is like the missing piece.
Yeah.
It clicked because it's so clicked because it's like it's now rigged, kind of. What I mean by that is, imagine, like, so okay, that was just a coin flip. We got indicators that's like giving you high probability chances of when it's going to go up and down. Right? Remember when I said if you took all the green bars and you took all the red down, like how can you lose, right?
Exactly.
That's all I'm saying, man. That is my time. Risk management. I'm telling y'all again. If it ain't me teaching you, please learn risk management. It will keep you in the game. It'll keep money in your pocket. And we just we changed it, but we just changed the percentage, and our account went that much higher. Same amount of trades.
That will just about do it. Now, here's the thing. I'm gonna say this real quick because I don't like to say too much after O gets done doing this because I want stuff to sink in. But when they say it's a numbers game,
That's all it is.
it's a numbers game.
That's all it is, brother.
That's all it is. And I'm gonna stop right there.
And it's always has been. And I think a lot of times we get into this thing thinking we know, like it's almost like it gotta go up. Because why it hit this part? It gotta go up. No. Like when you are okay, I'm gonna say this one last thing. When you're selling something, what makes you think everybody don't know? Like, why do you think it's the best plot for you to sell it? And you want everybody, so since it's the best spot for you to sell it, you want people to buy it there? You gotta think about it like that, right? Like you selling t-shirts for $30, and you're like, man, if I get these all for $30, and people are like, no, they're $25. So it's like again, man, it's a game of your best price is somebody's worst price. Your worst price, somebody's best price. It's just when you buy it and what you're risking when you buy. And I'm done. I appreciate you, brother, for letting me on.
Hey, the man to that one. I'm gonna let that stay right there. I ain't saying nothing else. Ladies and gentlemen, welcome, or should I say thank you, and you're welcome for attending today. We had a great stock trade investment talk today, my man. You can always contact the show at F of M podcast at frameofmindinc.com. Also, you can also give us a call at 302-689-3499. Again, FOFM podcast at frameofmindinc.com or 302-689-3499. That's all we got for you guys today. So continue to think it, speak it, and achieve it. And until next time, I'll holla. Thank you for joining the Frame of Mind Inc. podcast. And as always, here at Frame of Mind Inc., think positive thoughts, say positive things, and do positive deeds. As our tagline says, think it, speak it, achieve it. See you next time.
It's a frame of mind. It's what you say and what you do.
Don't forget to check us out on the web at www.frameofmindinc.com, where you can browse our online apparel store, listen to some of our original music and production services, as well as view our videos and projects we've done for our clients and customers. Pre-orders for my new book, Letting Go of Baby 2, From a Father's Heart, are now available at Sombawi.com. That's TSOMBAWI.com.